Welcome to this week's ASX strategy session. Great to have you with me. Thanks for joining me. Lots of interesting stuff to go through this week. We have breakouts, we have pullbacks, volatility in some stocks. So I think there's quite a bit to go through. We're going to cover the ASX 200, got copper, gold, oil, uranium, got a couple of stocks for you as well that I want to show you. So all should be interesting, I hope. As always, everything today is general commentary only, doesn't take your personal situation into account. Having gone through all that, I think we get straight into those charts. So we'll kick off with the ASX 200. And last week was all about the breakout. We got the breakout from this large trading range. And now this week we're getting the pullback on Thursday, and then coming into today. I'll come back and look at this in a moment. So the question is, is this a concern for the bullish scenario? And so we'll get back to that in a sec. But first of all, just recapping how we got to this current point. And the dominant feature, of course, is this large contracting trading range, been in place since the April high. And we've really been seeing the ASX 200 trade within this range since then. The other feature of note has been the persistent buying that we've seen along the moving averages, so the 50 and the 100-day moving averages. And this has been one of those signs of accumulation, or what we call buying the dip. When the market comes back, finds support, and then lifts off there. So that's been one of those underpinning positive tones to this market over the last several months. And this is a sort of price action that supports uptrends. And of course, the price action has been contracting. You can see it's been narrowing over that period of time within the range. And when a market compresses within a range and the price action gets tighter and tighter, it what it tends to do, it tends to build energy for the next significant move. And that's what we saw last week when prices broke high. So it's a bit like a spring. The spring lows and then it breaks, and you get that push higher. And so I think last week's price action was probably a combination of there's probably got fresh buying, people watching the range for months like we've been doing, then also short covering. You've had people, lots of negativity in the media. So you got people who are negative in the market, bearish in the market, and they put short positions on. Market breaks higher, they cover. So you get a combined buying effect. So that's possibly why it was such a sharp break higher. And this is the thing with ranges. These dull periods where not much goes on leads to periods of increased activity. And that's very much what we've seen, and that's when trends potentially develop. There's also been some follow-through buying since last week's strategy session. So last week, I did the filming before the market opened. And so since that time, we've had that follow-through buying up to a new all-time high, and so that's all been positive. But now we've got this fairly steep pullback from when was it? It was Wednesday's high, fairly steep pullback on Thursday. So does this steep pullback change anything? And at this point, I think the answer to that is no. In fact, I think the pullback is actually positive. And what would concern me if we had a market that just continued to run away on the upside. When you get those runaway markets, that's when things can get quite stretched. The price gets well away from the moving averages. That's often when we see that FOMO, that fear of missing out buying. And when that all happens, that's when a rally can become vulnerable to a larger shakeout. But in general, I think a moderate pullback like we're getting here, well, at the moment, I'd probably call this a modest pullback, not even moderate. A modest pullback after a breakout, it's both normal and it's constructive. And we often see it when we get these trading ranges. They build, they break, price often then pauses before rallying again. Doesn't always rally again, but often that's the cycle that we see. Now, one possibility that we get playing out over the next little bit of time, maybe the next few weeks, and we often see this type of price action in individual stocks, One possibility is that we get a bit of a sideways compression band starting to develop. And this is when prices track sideways in a narrow band. So let me just draw something in. So say we got something like this over the next few weeks. And then from there, once you get that compression, the moving averages catch up, we can then potentially look for like a move higher. This is sort of price action like in individual stocks. I see it a lot in the individual stocks. And let me just extend the moving averages out just roughly as a rough guide. And this is what you see. You get the breakout, you get the compression back to the averages, and then you get a rally. So that's one scenario that could play out over the next several weeks. That would be my favored case if we saw something like that develop. As I say, lets those moving averages catch up, and then you get a new platform to potentially get another rally. And that sort of consolidation could take several weeks if that were to happen. So as I say, that would be my favourite case. But there are all sorts of ways that the market could trade from here. It's just something to look for. It's not something that will happen because there are many pathways that could play out. And we'll only know the actual pathway in hindsight. That's how these things work. So I think it's really a case of just trying to understand some of the scenarios to look for and then having plans to manage them as we see which ones are becoming more likely to play out. A couple of other possibilities to keep in mind is this rally could get going relatively quickly. It could just be a short pause and then it just really starts to ratchet higher again over the next maybe couple of weeks. And that's entirely possible as well. So it may not be a protracted sideways consolidation over a month or so. It could all unfold quickly, more quicker. I think that sort of scenario is simple enough to manage for an existing portfolio. It's just a case of letting profits run. Just makes it a little bit harder if you're looking to buy stocks on a pullback, because the pullbacks could be muted in that sort of scenario. The flip side of all this, and it's always a case of it's not just looking at what could go right, what could go wrong. So what's the flip side? What could happen to derail all this? And there's always a possibility that this is a false break. Whenever you get a breakout, there's always a possibility that breakout doesn't stick and prices come back. Sometimes it's referred to as a bull trap. So a bull trap, it's like we get the breakout, all those who want to be bullish, they start buying, and then the price comes back down and the bulls are trapped and they end up covering their positions and the market falls away again. And we saw this in the US small caps back in 2021. Let me just quickly show you what I mean. This is your classic bull trap. And I'm not saying this is going to happen in the local market at all, just something to be aware of. We're aware of things, we can manage things. So let me just go back. So this is back in 2021. So we had this big rally in the Russell 2000, and then we got this big trading range which developed over a year or so. We got the bullish break. You can see that nice bullish breakout, but didn't stick. It came back. We had that, had the pullback, which is initially fine, but then it got back below into the range and the whole thing fell away. So that's something to look out for what could go wrong. So at the moment, we're not looking for something to go. We're not thinking something is going to go wrong, but you always got to be aware something can go wrong. Where could our analysis not be right? Where could we go wrong with our positioning? And this is where it's if this were to continue to pull back to the 50-day moving average, starts getting below the 50-day moving average, we say that's a false break. We start considering other things, but we're not there at this point. Just something to be in mind. No certainties with anything in this stock market game. So if prices start slipping back into the range, well, we just need to be aware of those bearish possibilities and be ready to manage risk accordingly. And that's what the stop loss, that's what the trailing stop, that's what those strategies are so effective at handling. So it takes that emotion out of it, because you're not just going, oh, look, well, wondering what should I do next. It's like, well, I know where my exits are. I can get out. I can manage my risk. I can protect my capital. But for now, I think the base case here is go with the break. Prices are above these rising moving averages. Path of least resistance is up. I'm long stocks. I'm actively looking to buy stocks that are rallying off their moving averages, that are breaking higher, and I think that's the play at this point. Path of least resistance. At this stage, it's still up, and the play for many months now, it's been stay long, wide trailing stops. Now, I'm going to move on to now, first of all, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube you're watching, you're engaging. YouTube shows other people, and that helps me a lot when you do that. So please do those things. And now I'm going to move on to the small ordinaries and the commodities in a moment. I've got a couple of stocks to show you this week, but of course that wraps up the free section. So if you're not a strategy session member, there's a link below. Just click that, come on in, cost very little. Hopefully the ideas that you get for it, more than pays for that small contribution in putting all this together for you. So okay, so let's go over to the small ordinaries.